Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Global stocks plummet as crude oil jumps more than 15% to more than $110 a barrel. We'll bring you full analysis of the moves. Iran names Ayatollah Khamenei's son, Mojtaba, as its new supreme leader, signaling a continuation of the regime's hardline approach. Plus, a setback for the German Chancellor as he suffers a stinging defeat to the Green Party in a crucial state election. Let's take a look at these markets then, because a couple of hours ago oil was even higher, up almost 25%. Got very serious this weekend. We right now have Brent trading at 106.71, so that's up more than 15%, and WTI up more than 13%, trading at 103.55. We'll see how this progresses throughout the day, but Halima Croft saying there's extraordinary and acute stress in this market. We have Natasha Kaneva of JP Morgan also saying that by the end of this week, 4 million more barrels could be shut out of this market if things continue the way they are, with production shutdowns and storage filling up. You can see the dollar index continues to be the haven of choice, up across practically every single currency except maybe a tiny bit the Swiss franc, which is slightly higher today. Let's take a look at yields and some other assets, because we're up 7 basis points across the board for US Treasuries. Those inflation fears are absolutely baked into this market now. We're still below 420 or just there and about, but we are getting there rapidly. Ed Yardeni is saying that the market is increasingly thinking about a 1970s stagflation scenario, and he has lowered his chance of a melt-up to 5% this year for US stocks. He's raised his chances for a US recession this year to 35% from 20% as of now. As you can see, the VIX closed out Friday's session much higher with that sell-off into the close. We're almost at 30 today, and S&P futures, as you might imagine, pointed lower. Risk events today then, we have German factory orders coming out, expecting a little bit of improvement as that fiscal stimulus kicks in. We have a Eurogroup meeting, oil is going to be on that table, and starting today, NATO military drills in Norway. Oil soaring towards $120 a barrel as more Middle East producers curb production with the Strait of Hormuz all but closed. Brent surged as much as 29%, the biggest intraday move since April of 2020. The U.S. Energy Secretary has tried to downplay the huge jump in prices.
We have that oil. We have the world is very well supplied with oil right now. The United States is a net oil exporter. We're a net natural gas exporter. We are suffering high prices, not in natural gas, but in oil, because it's a globally connected market. We're communicating with our allies abroad. The oil is there. You're seeing a little bit of fear premium in the marketplace, but the world is not short of oil today or natural gas.
Let's bring in Bloomberg's Stephen Stapczynski now. Stephen, clearly markets are not convinced by the White House, with Halima Croft from RBC saying markets remain acutely anxious. How strong is the sense of panic out there?
Well, I mean, I think you could see just the way that prices reacted over the last 4 or 5 hours, right? They opened early Asia morning. You saw prices surge 25%. Oil, Brent, nearing $120. And then there was an FT report just out in the last hour or so saying that G7 members will be meeting later today, early U.S. morning, to discuss a potential joint release of the strategic oil reserves. And then prices kind of tapered a bit. You're still above $100 a barrel, which is huge, considering where we were just last week, around $70 for Brent. But I think that's what the market has been waiting for, right? They have been, when you hear the U.S. Energy Secretary talking about there's enough oil, it's not so much that, you know, there are some countries that aren't getting the deliveries that they need, especially in South and Southeast Asia. But in terms of oil in reserve and in strategic reserve, that's correct. There is a lot of oil available. It's just whether or not those strategic reserves would be tapped. And we heard last week Japanese refiners were pushing their government to try to go forward with tapping some of their reserves. But this sort of action by governments works best in chorus, which is why it makes sense that the FT is reporting that they're going to be discussing this. The U.S., according to the FT, is for that plan, along with 2 other G7 members. And we'll find out more later as that comes closer. But I think there is worry in the market that there is no end in sight for the what's happening in the Middle East, the war in Iran. And as long as there's no end in sight, the idea that the Strait of Hormuz, which is a vital waterway for 20% of seaborne oil and fuel products, that's going to remain shut. And that's going to cause a strain on the markets, prices, and consumers.
All right, Stephen, we have to leave it there. Stephen Stepczynski, who heads our energy coverage for Asia. Stocks in Asia are having their worst day since April, with the benchmark index headed towards a correction. Let's get an update now from Winnie Su in Hong Kong. Winnie.
Yeah, morning, Bonnie. It is a very ugly day for Asian markets. It's pretty much a sell everything but the dollar or oil story that's playing out. And as you just mentioned, we're looking at MXAP here down about 4%. Yes, it's pairing a bit of losses after those G7 headlines coming through around the releasing the oil reserves. But overall, it's still a pretty dark picture. And with that technical correction milestone, we're also looking at Taiwan's TAIEX index and also stocks in the Philippines around that same milestone, with Indonesia actually headed for a bear market. Now, you flip the board and take a look at what's going on in the Korean market, because Kospi is actually leading losses in Asia today. You're looking at Kospi down about 7%, and also Korean won, as well as a Korean won weakening and the bonds getting sold off. So it is a lot of kind of gloomy picture here in South Korea, with regulators stepping up their effort when it comes to the stabilization fund. And also we saw that trading halt earlier on the Kospi. Now, it is a lot of worries around the inflation, also stagflation, and that is also ramping up the bets around the rate hike when it comes to the Bank of Korea. Now, you flip the board and also take a look at some of the sectoral moves when it comes to the surging oil price. As you can see, that tech stocks here leading declines, and you're looking at these big names down about 10% or so. Obviously, there's also that factor of the news coming out when it comes to OpenAI and Oracle having ended that expansion when it comes to the data center in Texas. But the sector's overall reliance on energy and also global economic outlook is actually still weighing on these stock prices. Back to you, Bonnie.
Yeah, Winnie, Neil Dutta actually pointing out today of Renmark that those countries that are most dependent on oil imports, right, Taiwan, South Korea, they're also the most tech-heavy markets. So it's a fascinating sort of coming together of both of these difficult areas. Winnie Su in Hong Kong. Iran then has named the son of the late Ayatollah Ali Khamenei as its new supreme leader. 56-year-old Mojtaba Khamenei won a decisive vote in Iran's Assembly of Experts as Iran's Islamic Revolutionary Guard Corps pledged full obedience to the new leader. For more, Bloomberg's Jumana Bersachi joins me in Dubai. So give us a picture of who Mojtaba is, Jumana.
Yeah, well, he is essentially a continuity candidate and quite literally cut from the same cloth as his father, his predecessor, Ali Khamenei, because he is very much supported by the hardline clerics within the regime, very much supported by the Revolutionary Guard Corps. And actually, the IRGC put out a statement pledging full obedience to their new leader. And his rise has been supported by the IRGC. There's little doubt that his influence their influence would continue to grow under his leadership as well. And the other thing to note about Mojtaba is he has very strong clerical background, a very strong foundation in theocracy, but less so in matters to do with security and foreign affairs. And so the initial reaction is perhaps this would also serve to elevate some of the other names that we've been talking about in the last week who've been making some of those critical decisions, like Ali Larijani and the Speaker of the Parliament. And remember, these two figures were the ones who came out on Saturday afternoon contradicting the statement that the president put out, suggesting that he wanted to extend an olive branch to Gulf states. So it does tell you that still from within, the IRGC very much have a grip over the situation, and the power command structure is still resting upon this centralized unit. And at the same time, President Trump has said that the choice of Mojtaba Khamenei would be unacceptable. He also said over the weekend in a Truth Social post that he wants nothing short of complete surrender. And so the war itself doesn't see any signs whatsoever of things de-intensifying or de-escalating.
No. So, Shimana, bring us up to speed with what's been happening over the last 2 days. What's the latest in the conflict at this point?
Yeah, well, operations are continuing both ways. The IDF striking 400 targets in the course of the last 24 hours. They also hit a fuel depot in Tehran as well. Reports emerging overnight that the U.S. were not so happy with that because they're not so comfortable with civilian infrastructure being hit. Even Senator Lindsey Graham saying that perhaps that's one step too far and that you don't want to completely dismantle full infrastructure and not give the Iranian people a chance to rebuild after the war. So this is notable because it's perhaps the first sign of a bit of friction that we've seen between these joint U.S. and Israeli operations. And in return, despite President Pezeshkian's comments early Saturday morning, Iran continues to retaliate against Israel, against the Gulf states, and perhaps in diminished missile capacity, but they continue to fire these drones. The lion's share of them are intercepted, but as you've probably seen the reports over the weekend, the debris is still causing significant damage. There's a building in Dubai that was damaged by debris, and they continue to target these key infrastructure sites as well. Energy infrastructure continues to be a line of focus. Overnight as well, another attempted strike on the Bahrain refinery, and then also another round of escalation in terms of a new front opening up. Iran also targeted a desalination plant in Bahrain too. Now, even though it caused limited damage and the supplies are still running, it does tell you that their targets are still very much at strategic parts of these Gulf states, and they're continuing to try to inflict as much economic and political damage as they can across the region.
Jumana Bersechi, thank you. And just on that, I want to break some news. Bahrain's Bapco Energies has declared a force majeure now on operations. Once again, Bahrain's Bapco Energies has now declared a force majeure on operations. Bapco says the local markets are fully secured, so the needs for the local markets are fully secured. But in general, Bapco Energies declaring a force majeure on operations, basically shut in at this point. Market veteran Ed Yardeni has raised the probability of a market meltdown in the U.S. Actually, has lowered the possibility of a market melt up to 5%, raised the possibility of an actual recession to 35% for the rest of the year. That's up from 20% previously. Let's bring in Mark Cranfield, cross-asset strategist at Bloomberg Live. So, Mark, a warning from Yardeni. Futures pointing to a very rough day for U.S. stocks. What are the odds of a major sell-off at this point? And I'm not just talking about a couple of more percentage points.
Yeah, much higher than they were a week ago, that's for sure. As you've been hearing from everybody today, I mean, the significant change over the weekend is the fact that oil prices are now above $100 rather than below, and they're quite likely going to stay there for some time as well. That's a game changer, really, across asset classes, not just for US markets. There was a feeling among investors last week to some point when the US dollar was very strong. Maybe the Federal Reserve as a central bank could consider lowering interest rates, that there was some kind of insulation for US equities from some of the moves going on in the rest of the world. That really is out the window now. You're seeing such deep sell-offs across the rest of the world, here in Asia, in Europe as well. Treasury markets, yields climbing there aggressively. People now really on the back foot because of the jump in energy prices as well. There is zero chance that the Federal Reserve can constitute an interest rate cut in the near term. In fact, the way things are going, it looks like there will be a jump in inflation for US consumers as much as anybody else around the world. And that, under normal conditions, would make people think that interest rate hikes would be on the table. We're seeing that certainly priced in Europe, in Australia, in many parts of the world now. The conditions have changed completely. So rather than US equities being somehow on the edge of all of this, they're being dragged right into the center of it. And it'll be very surprising if the US market can withstand this onslaught, which is coming from the rest of the world now. They're really just a full part of it. You might get some soothing messages. Federal Reserve speakers may say they're going to take their time. They're going to assess all the data. We had a weak jobs report on Friday. People have looked past that pretty quickly. But when you've got oil prices above 100 and the impact it's going to have, US stocks are going to have a pretty tough time.
Yes. Mark, just very briefly, when I woke up this morning, we were looking at $120, $125 a barrel for oil, and I started to think things were getting disorderly and maybe out of control of the US administration entirely. Is that a risk this week?
The markets are extremely volatile. We no doubt will get central bankers trying to cool things down. The fact that the G7 is considering releasing some of that oil together, you can tell that the authorities are very, very concerned by what they're seeing. But typically when it's markets which are becoming unhinged, we look to central bankers. We look to them to be able to get everybody back and to say the markets are functioning properly, all that kind of thing. So we can expect a slew of European central bankers, Federal Reserve, all around the world, all trying to make people feel better. It's going to be very difficult when you've got oil prices where they are.
Mark Cranfield, cross-asset strategist at Bloomberg M Live. Thank you so much. Still to come, Iran chooses a hardliner to become the next supreme leader. We'll discuss the potential US response later. But first, the UK Prime Minister accused of weakness over the Middle East conflict. We'll speak with the Deputy Leader of populist party Reform UK next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The UK Prime Minister Keir Starmer had a phone call with President Trump on Sunday, the first time the two leaders had spoken since the president criticised Starmer for not supporting strikes on Iran last week. The populist opposition party Reform UK, which leads opinion polls in the country, has heavily criticised the Prime Minister's response. The Reform Deputy Leader Richard Tice joins me now from Dubai. So, Deputy Leader, thanks so much for joining. In the latest YouGov poll, most Britons actually oppose these strikes, oppose this war. And even in your own party, it's just a 58% approval. Do you disagree with the view of the majority of Britons?
Leadership is all about taking tough decisions and also standing up for what is right. No one wants war, but the reality is that the West cannot tolerate a nuclear capability Iran or ever longer ballistic missiles. And that's why we support the US and Israeli action to try and reduce that capability. And the issue with the Prime Minister of the United Kingdom is that when you get requested to use the UK air bases in order to help that effort, to refuse that shows a complete sort of betrayal of the special relationship and shows that under a Starmer government, the UK is not a trusted ally. And I'm here in the UAE. I've met a number of people here at senior government level and others, and expressed our solidarity with those in the region. It's absolutely vital that partners and allies stay together.
Well, Reform does want a quick end to the war. So what would that look like, particularly if the US were to use UK military bases, in a sort of an unlimited capacity? What cost and how long would you be prepared to fight?
Look, at the end of the day, obviously, there's risks to what the US and the Israeli governments are doing. But the greater risk, and this is so important for everybody to understand, was to allow the Iranian regime to grow ever larger its long-range ballistic missile and its potential nuclear capability. And degrading that consistently has to be the fundamental objective. And as and when the Israelis and the US think that they've achieved that, let's wait and see. But I repeat the point. The key thing for the West is that allies should stick together in vital strategic moments like this.
I just wonder how imminent of a threat it was and whether, taking Iran on at this moment would have been in your mind had it not come up in the United States first. You said you spoke with the Minister for International Cooperation of the UAE. Obviously, you expressed solidarity. What else did you ask for in terms of Britons in the UAE and what the UAE might need?
Well, we talked about the very successful UAE Intercept program, and I've been here for some 3 days, and it's quite clear that their Intercept program is doing an incredibly remarkable job. I think they are very pleased with how that is working out. Obviously, no one wants to be in this situation, but equally, strategically, I think anybody who really understands and looks at this situation says it's intolerable in the long term, and therefore it had to be dealt with, and that is essentially what is going on. But it was really important to emphasise to the UAE the strength of solidarity that those of us in the UK who recognise that important relationship, which has been going back for many, many decades, and reinforce that. And I'm concerned that Prime Minister Starmer has significantly weakened that and weakened the trust and confidence in the United Kingdom.
Domestically, and briefly, if you would, sir, Starmer is pledging to help UK households because the price of oil is going up. What do you think of that effort? How much can he do?
Well, the smart thing to do would be to use our own oil and gas reserves, offshore and onshore. And that's why net zero is so damaging to our own security. And that's led to higher bills. And reform would scrap net zero, which would very, very rapidly mean to lower bills. And if we had using our own gas, then we could, and oil, then we could have lower prices for everybody. That's why the US, for example, has got much lower gas prices, because it's using its own shale gas. We should use our own energy treasury in the United Kingdom, and a reform government absolutely would.
Mr. Tice, how long more are you going to stay in Dubai? Have you decided? And will you be able to get out? How will you do that? Do you need to use a private jet?
No, Emirates and Etihad are flying. Most of the flights are going. I'm leaving today. And I think the resilience of the operations here is truly remarkable. Very, very impressive, actually. And I think in the UK, we could learn many, many lessons from how the leadership in the UAE are doing things.
Final question, Mr. Tice. Did you get any sense of what kind of interceptor inventory the UAE still has?
I understand that they are delighted with how it's going so far, and I have every confidence that will continue to be the case without going into any operational details, of course.
All right. Well, thank you so much for joining us today, and hope you get out fine after your 3-day trip to Dubai. Richard Tice, Deputy Leader of Reform UK there, and we have reached out to the Foreign Office and the UK government too. They declined to comment. Coming up, New York police open a terrorism investigation after an explosive device was thrown near the mayor's residence. More on that next. This is Bloomberg. Now to other top stories we're following this morning. New York City police are investigating a potential terrorism link after an improvised explosive was thrown near the residence of Mayor Zoran Mandani. 2 suspects are in custody following the incident on Saturday, which triggered a bomb squad response. Norwegian police are investigating whether an explosion outside the US embassy in Oslo is linked to the war in the Middle East. The blast in the early hours of Sunday caused minor damage with no casualties reported. Authorities say it's far too early to link the incident to the Iran war and are also considering other theories. War in the Middle East is fueling soaring prices for agricultural crops as energy and fertilizer costs increase. Palm oil has surged as much as 10%, with soybean oil jumping and wheat nearing a 2-year peak. Disruptions to crude oil supplies are also boosting the appeal of crops-based biofuels, lifting demand for vegetable oil and corn. Coming up, Iran chooses a hardliner to succeed Ayatollah Khamenei. We'll discuss the potential impact on the path for the war next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Global stocks plummeting as crude oil jumps more than 15%. It was almost $120 a barrel at one point. We'll bring you full analysis of these moves. Iran names Ayatollah Khamenei's son, Mojtaba, as its new supreme leader, signalling a continuation of the regime's hardline approach. Plus a setback for the German Chancellor as he suffers a stinging defeat to the Green Party in a crucial state election. So as you can see, it looks a little bit calmer right now, but we did have Brent and WTI trading up almost 25% just a few hours ago. An FT report that G7 ministers are talking about maybe releasing something collectively into the oil market, calming the market ever so slightly. But as you can see on both of those oils, we are well above $100 a barrel. Remember, we finished the Friday session at around $90, $95 a barrel apiece. Natasha Kaneva of JP Morgan saying we're looking at another 4 million barrels a day getting shut in just this week alone if this continues. And Halima Croft basically saying there is severe anxiety in this market. The dollar index is the haven of choice. It's been gaining all morning long, up 0.4%, stronger versus relatively all other currencies. Perhaps the Swiss franc is maybe the slight exception. In terms of treasuries, stagflation is becoming a huge issue in this market. Ed Yardeni talks about the market increasingly thinking about a 1970s scenario. So if we could flip the board, you'll see that treasuries across the curve are up about 7 basis points, just a little off that now. The VIX index closed on Friday almost at 30, and that's very likely to increase today as we're seeing stocks sell off. Euro stocks 50 down more than 2% in terms of futures. It's the exact same story for US futures. Time now for your front page news. The Financial Times is focusing on how Iran's choice of Khamenei's son as supreme leader will likely lead to more hardline policies from Tehran as the regime fights for its survival. The Wall Street Journal writing that Trump is coming under pressure back in the United States to address gas prices and his war strategy in the Middle East. And Bild in Germany is leading with the German Chancellor's setback in crucial state elections, losing the state of Baden-Württemberg to the Greens. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. So Iran has named the son of the late Ayatollah Ali Khamenei as its new supreme leader. President Donald Trump, meanwhile, called $100 barrels of oil a small price to pay for safety and peace, with neither side showing any sign of de-escalating a war now entering its 10th day. I'm joined now by Laura James, senior Middle East analyst at Oxford Analytica. So this war is becoming a little more entrenched as the days goes along, Laura. What are the options next for the United States should it wish to even try to de-escalate, which it doesn't seem to want to do right now?
Well, the nomination of the succession to the supreme leader yesterday, with Khamenei's son being appointed, definitely shows that Tehran is not ready yet to roll over. And I think that limits US options for the immediate term. That said, I think there are always possibilities for the Trump administration to declare that Iran has effectively surrendered. One option would have been if there had been a slightly more pragmatic move. We saw on Saturday that the president suggested that he was apologizing to neighboring countries. Trump seized on that, in fact, immediately as a sign of surrender. And the pushback in Tehran was massive. So that route is looking closed off. The other option is to declare, as Hegseth, the defense secretary, has sort of implied, that surrender can be equated to Iran not having the military capacity to attack anymore. And I think that's the more likely route for the US administration at the moment, to say they've effectively surrendered because they can no longer fight back effectively. The problem there is, how do you do that if you can't reopen the Strait of Hormuz and give oil producers and gas producers the confidence they won't be hit by drones and can restart operations? Because although Iran's high-tech capabilities are suffering a huge pounding, stopping drones, small boats and low-tech options is much harder and can take longer. So the exit strategy is looking very complicated for the United States.
Also, Laura, it would seem to me that if the US at all declares that there has been a surrender, that's just going to inflame Iranian reaction, right? And the US would not be able to control that at that point.
No, and I think they'd have to wait a little bit longer until they thought that they'd hit more of the senior people, possibly killed the new supreme leader as well. It's worth bearing in mind that intelligence penetration of Iran's structures is still quite heavy. and Israeli and US combined intelligence is very good. So they'd have to kill more leaders, attack the lines of succession, attack mid-level commanders, and wipe out more military capacity. But this is, as I've said, a very risky strategy. It seems to be a direction they're thinking in, because interestingly, when Trump said he didn't mind high oil prices, he also said it would be a very short spike. And I don't see how that scenario is going to unfold at the moment.
Well, and each day as production capacity is shut in, the less likely it becomes, right? Because you can't just turn that back on. Curious, Laura, as to the idea of, the asymmetric capacity that Iran has to fight back. Does it have unlimited asymmetric capacity?
Not unlimited, but if you like, there's a very long tail. It's worth bearing in mind that Iran has spent the last several decades sponsoring asymmetric capacity across the region. Now, those asymmetric actors are not all in a position to help Iran at the moment, although the Iraqi militias are doing so quite effectively to some extent. But Iran knows how small militias, small cells, groups can be tasked with drones, with other low-tech options that they can actually produce or use quickly that aren't too expensive. It knows how to fight that kind of war because it has been sponsoring it across the region. And so if Iran itself moves in that direction, then they have capacity and quite a lot of equipment to enable them to do so.
When President Trump talks about seizing Iran's uranium, deploying special forces, what do you think? I mean, they say that they're looking for it, so presumably they don't know where it is yet. And I mean, is that at all realistic?
It's an incredibly risky operation because as far as we know, the uranium is underground since last June. But I can't see that they can have an absolute confidence that nothing was moved. You'd be going into sites where Iran has had a long time to set up security, booby traps, various other things. And it's not clear, how safely you can extract this uranium in war conditions. So this would have to be, I think, a scenario where we're sometime down the line and any military capacity of Iran has been sapped. And even then, this could be a last-ditch place for security forces to hold out and defend. So, pounding those sites, yes, putting boots on the ground safely and getting them out safely with the uranium is a massive operation. The other place they're talking about boots on the ground is Kharg Island to stop Iran loading oil, where it's notable that operations have been very little disrupted. But we're seeing so many signs of escalation that, oil infrastructure, that desalination infrastructure in Iran might be hit, that there might be retaliation in the Gulf in those two very sensitive areas. Things could get a lot worse. And boots on the ground aren't going to fix this.
Saudi Arabia has been ramping up what it's pushing through its oil pipeline to the Red Sea. But I'm curious, Laura, I mean, are the Houthis going to be active again? Can Saudi Arabia guarantee safe passage of oil through the Red Sea, even if it is, twice what it's been sending and still much, much less than would go through the Strait of Hormuz?
The Houthis say that their finger is on the trigger. That's the latest official comment from them, that they're ready to intervene, but they haven't declared yet that they will. And I think they have strong reasons to stay out. The Houthis, while allied with Iran, have always been the most independent of their allies in the region. They seek their own domestic interests first. They've already suffered heavy hits from the United States and Israel and know that further ones could undermine their viability. They also know that they need to keep Saudi Arabia on side if they want any prospect of improving their economic position, particularly since Saudi Arabia has since December, strongly entrenched its position in southern Yemen and unified forces there more effectively, potentially against the Houthis. So I think they'll try to stay out, but I also think that will become much harder in a longer war because for ideological reasons and also for reasons of just spillover. If there's a small strike, some kind of operation that accidentally seems to bring them in, they may struggle to hold back. And Saudi Arabia may also think this is an opportunity to encourage United States and Israeli help in attacking the Houthis. So I think in a longer war, they're unlikely to be able to hold that line. And that would be a massive threat, as you've said, to the Bab al-Mandab and the Strait of Hormuz, both effectively closed at the same time, not physically, but simply because ships don't want to risk it.
All right, Laura, we have to leave it there, but thank you so much for your context. Laura James, a senior Middle East analyst at Oxford Analytica. Staying on Iran, President Donald Trump is weighing the option of deploying special forces on the ground to seize Iran's near bomb-grade uranium. That's as officials grow increasingly concerned the stockpile may have been moved. Let's bring in Becca Wasser, defense lead for Bloomberg Economics. So, Becca, we were literally just talking about this. How likely is that the U.S. will send in its special forces? It would seem like, really bad timing right now.
Absolutely. I think, President Trump has retained the threat of ground forces in part to coerce Iran's leaders to try and capitulate to his demands. With new leadership, I don't think we're going to see anything different there. But really, it would be an incredibly risky operation to send in ground troops of any kinds, whether that is special operations forces to try and seize some of the highly enriched uranium, or whether it be another smaller group, whether for a Karg Island scenario or even forces on the ground trying to help potential other groups call in airstrikes, depending on how this goes. But President Trump has been clear about another thing, which is that ground threats would need to be totally neutralized in order to bring in ground forces. And that is not the situation in Iran today. There are still incredible threats on the ground, even despite some of the massive US and Israeli joint strikes. So while President Trump thinks of special operations forces as America's military fix-it button, they're not without risks, and sending them in at this juncture in time would be a highly risky endeavor, particularly if the objectives are not fully clear.
How long can the Gulf keep defending, Laura, as this war continues day after day now?
I think we've seen already a shift in tactics, trying to move away from using some of their more expensive air defenses to instead using slightly more affordable mechanisms to try and bat down some of the drone threat in particular. We've seen the UAE shoot these down with their Apache helicopters using the machine guns that are already based upon that. That's a much more affordable cost per shot than trying to use a limited Patriot interceptor. So I think we've seen a understandable defiance from the Gulf states about some of their sovereignty being infringed upon and about the attacks upon them. And I think we're going to see them try and shift tactics to be able to defend their populations and critical infrastructure, ranging from energy to AI data centers to water desalination plants.
Becca, since we last spoke, we now have a name for the supreme leader. We know it's Mojtaba. Does it change the calculus at all on whether there will be any kind of a revolution in Iran?
I'm not entirely sure, as I'm not, an Iran expert, but I think we are seeing a great deal of continuity. He picks up his father's mantle. He has a number of the same principles and teaching, and he is the IRGC's preferred candidate. So I think there you see more continuity than change. That being said, that could change things a little bit, but I'm not really sure that that's going to move the needle, both on the ground for the population in Iran, as well as for President Trump.
All right, Becca, thank you so much. That is Becca Wasser. She's defense lead for Bloomberg Economics. Let's take a look at these markets then as we enter a new trading week with a lot of anxiety on the table. We have oil prices down substantially higher today. Brent crude up about 17%. That was 25% earlier. Maybe coming off a little bit after the FT reported G7 ministers are talking about releasing some, a coalition, if you like, of countries, some of their reserves. We have Treasury yields rising another 7 basis points across the board. And we also have the dollar index continuing to climb. Now, let's take a look at what happened in Asia, because the Nikkei 225 is now in a technical correction. It's down more than 10% from its February peak, down 4.5% today for a more than 10% decline. Like I say, again, that drop today was more than 5%. The Kospi also down more than 6%, almost 6% today, and Taiwan's TAIEX index down 4.4%. Well, coming up, a setback for Chancellor Merz as the German Chancellor loses a crucial state election. We'll speak more about that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The German Chancellor has suffered a setback in a crucial state election, losing the state of Baden-Württemberg to the Greens. Friedrich Merz's CDU party had been projected to win back the state for the first time in 15 years. Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent. Ollie, what does the election outcome mean for Merz?
Yeah, Vani, this is a sort of significant region of Germany. It's the third most populous and the third biggest economy in the world, and it's home to a lot of the companies that we think of as the industrial backbone of Germany, whether it's Mercedes-Benz, SAP, Bosch, Porsche. These are all companies that are based out of Baden-Württemberg. And what we got in this election is the Greens seemingly coming out in the front to winning it after months where the CDU had been projected to basically come in and comfortably retake this seat after having held it from the 1950s to 2011. That's when the Greens came in and basically knocked them out. And as you saw, getting closer to election day by day, that lead began to be eroded until now, ultimately, the Greens have retaken the seat. So it's not exactly a massive vote of confidence for Friedrich Merz, who, since his very first day as Chancellor, when he was supposed to have a rubber stamp vote at the Bundestag, and basically failed that from his own lawmakers in the coalition that they had agreed to, really not a sort of inspiring signal from this Chancellor of Germany, who's really trying to gain that support, gain that momentum, and really sort of failing to yet again in the state election. We should say this is the first state election of 5 that he will have this year. He's been Chancellor for less than a year now. So to see whether or not these results are going to basically be an indicator of what we're going to see in the future. What we should also say, Vani, is that another point about this election is that the AfD got about 19%, the Alternative for Deutschland, the far-right party. This was never a competitive election for them, but they have still managed to double the number of support that they had in this region of Germany. So thinking about the sort of political threads within Germany, those political narratives are still very much intact in what we're seeing in the result of this election, with the far-right ascendant and that center-right really trying to really having difficulty cutting through.
Ollie, we were just starting to look forward to better economic data out of Germany. So on the economic front, what does the war in Iran mean for these green shoots that we've been starting to see?
Yeah, I mean, this was really supposed to be the year where we start to see a real turnaround in the German economy. We looked at GDP from the last quarter of last year. You started to see some indications of it. It grew 0.3% quarter on quarter. And when you looked at the nature of that growth, it was significant. A lot of it was government spending. That was up 1.1%. That really helped sort of things out. The consumer was also helpful, 0.5% increase in the fourth quarter. That was really the two things that drove the economy. When you look at actually the things that detracted from it, it was exports and imports. Both fell in the fourth quarter, but still managed to eke out growth. What we also saw in the last couple of weeks, Vani, was the first positive, the first non-contractionary manufacturing PMI print in Germany since 2022 in the month of February. So these were all sort of positive indications, in addition to the fact that there were a number of these trade deals that had been signed. These are going to be sort of tailwinds for the German economy, Mercosur with Latin America and India. And now you have to deal with another energy shock, not quite on the same scale that we saw from the war in Ukraine, but the German economy is 20% industry. All of those input costs, whether it's getting the shipping and all of the supply chains to the energy input costs, are going to have a significant impact on the economy, to say nothing of the fact that it's going to have obviously also an impact on consumer sentiment. And we spoke to some of the ECB folks last week. They're really trying to get their arms around what the economic impact is going to be. But really, you had a sort of positive story coming into the year for the German economy, and there is a chance that that is being basically torched before our eyes with this war in Iran.
All right, Oliver, thank you so much. That is Bloomberg's chief Europe correspondent, Oliver Crook. Plenty more coming up. This is Bloomberg.
There's a lot of oil. We've got a lot of oil. Our country has a tremendous amount, and there's a lot of oil out there. That'll get healed very quickly.
Would you consider using the SPR or tapping into the SPR at some point?
strategic reserves? Well, I'm the one that built them up. We will start at the appropriate time, which is basically a gut instinct. We will start filling up the strategic reserve.
President Trump speaking there aboard Air Force One over the weekend. I want to point to this two-day chart for oil because this is going to set the tone for the entire week, I would imagine. You can see the major gap up as we came into the Monday session. So we started up about $120 a barrel at one point on Brent crude. Then we had the FT report that G7 ministers were considering a sort of joint release of reserves from all of their countries, and that calmed the market ever so much. I mean, we were still trading around $105, $106 a barrel. As you can see, until we get confirmation of that, numbers, what it's going to mean for the market, we are seeing oil rise again. Bear in mind, last week, 6 months of global supply was traded. 18.6 billion barrels of oil was traded last week, and it was a massive week for oil. As you can see, volatility levels just across the board, but particularly for stocks, are absolutely extreme, though not as extreme as we saw on Liberation Day. That VIX got to about 60 on Liberation Day, if you look at that most recent spike there. The MOVE index as well, I will say, for Treasuries is inching ever higher, though things seem to be a little bit more orderly when it comes to Treasuries, creeping ever so higher on stagflation concerns. Let's take a look at the next chart because we're obviously seeing haven plays, and as you can see, dollar yen is eyeing a breakout. Options traders are changing course on their Iran conflict, but as we can see today, the dollar index itself just keeps on roaring higher. By the way, on Japan, the Nikkei 225 has entered a technical correction. It was down 5.2% in this Monday session. And finally, a final chart that we're going to take a look at here, if we can get to it. Well, perhaps we'll just leave that one. To access all of the charts, you can search and save them on your Bloomberg terminal. Just go to Chart Go. It's a brand new function, CHRT TV Go. Your risk events for the week then. On Tuesday, we get Aramco earnings. We'll see if Aramco says anything about the current situation. Then we get CPI for February on Wednesday out of the United States. Now, will that be a little stale given all of the events of the last few days? We'll have to see. And then China's NPC closes on Thursday. That five-year plan already out there, however. Let's take a quick check at these markets now as we prepare for what could be a very long week ahead. So we do have oil rising. We have stock futures across Europe just plummeting at this point. Euro Stoxx 50 pointing to a decline of more than 2%, particularly egregious for DAX futures. The opening trade is up next. This is Bloomberg.